going on, guys? Excuse my voice. So, today I kind of wanted to go over the 2008 financial crisis. Kind of what that looks like in the charts. So, here we have, this cup and handle formation here after a long run up by gold. So, let's go to present day and kind of check out what's going on here. So, present day gold, got kind of the same thing going on here. We got this cup and handle formation, and we got the breakdown. So let's go back to 2008 for a second and check out kind of what was going on here. So this is a bit of a smaller cup and handle compared to the one we were just looking at, but it's the best that I can see as far as resemblance. So let's come over here and take a look at the dollar. So if we look at gold and we try and estimate where we are on this chart, and we're going to use this cup and handle here. Right here is about when we broke down from the cup and handle. It's about July. So let's just use July to August of 08 for a reference point. So let's check out Dixie. So here we are, July, August, right here. And what happens? We got a big run up. It's about an 18% run up. And we hold there for about a year. So, as far as percentages, it's hard to evaluate if the percentages are going to be the same. It is unlikely, but we can look at what happened in past price action and kind of see what was going on. Let's look at the SPY. So the SPY here, if we go to August of 08, we kind of had a bit of a run up here. If we go back over here, there's quite a bit of a run up. There's a bit of a distribution phase up here. And then we get to, July, August, somewhere in here, where we're breaking down out of here. And if we throw on the ATR, and we go to, let's say, a day, we go all the way back to August, July of 08. What do we see? Let's also throw on my indicator. So we're kind of seeing a breakdown right in this area of July of 08. Kind of this formation. We got breakdown, retest of this calibrated ATR, retests of this calibrated ATR. So let's go back to present time and see what's going on. So present time, what do we got? We got a run up, we got distribution, and we are having breakdowns here. Okay. And we're having retests of this ATR. Now if this ATR doesn't break, we're going to continue to fall down. Because let's go back to where I think we are in this current cycle, August of '08. So here we are. Excuse my mic. Apologize. Having these little retests and breakdowns. And these buy signals are based on volatility expansion over a period of time. So volatility is expanding down for a long period of time. It's going to flash these buy signals. We can go over that in a different video if you guys would like. But it also prints the same thing with high. So it's the same calibration down and up. It's open source, so I can go into it a little bit if you guys would like. It works a lot better on Bitcoin and cryptocurrencies. It's not a, I haven't tested it for these kind of indexes and stuff like that. It's meant for like 4-hour time frames and stuff, but it's sometimes good to see what's going on with volatility. So, you know, we're having these breakdowns and we're not able to break up and press up out of here. So here we are in the summer of '08 and we're struggling here. I believe this is where we are. Now, the only thing that's a bit different, I mean, I'm sure there are a lot of things, but when we look at '08 here, we're at a dollar downtrend, you know, for a long time here. Does that hold weight? I don't know. You know, a lot of different things going on at that time. And we got kind of a sideways choppy market from the dollar for the next couple years here. Then at the 4-year mark, kind of break above that level 1 and then consolidate for another 4 years. So not much weight in the Dixie. It's just important to see when we look at the dates and we're comparing, it's important to always notice the dollar and always compare the dollar because that is the most important thing. So now we can talk a little bit about the housing market and stuff like that. So the housing market, do I think that much is going to change besides rates going up and prices kind of staying the same? And it's no. The only thing that's really going to force a seller's market is, or a buyer's market, I get them mixed up. Whenever the buyer, or whenever, yeah, when the buyer has control, that's not good. So what that means is, if for that to happen to us, for the buyer to have control, it's going to take the boomers and the most populous, which is the boomers, the people who have the most money, which is the boomers, to be forced out of their house. And I just don't think that's going to happen. We saw Social Security just get raised. I don't know, I think it was 6 or 8%. And I think as long as they don't force out the boomers to get cheaper houses, I don't think much is going to change besides JP raising the rates. But unfortunately, what I do see is, as we look at the SPY here, and if my assessments are correct, and these little retests, like right here, let's go to present day, retests here, here. This is a really important part right here, because we're retesting this. Not that this ATR has much weight, but it's important to follow. We follow a system here, and I'm curious to see, lower level, lower level, lower level, retest, retest, retest. It's not looking great. So let's go to what I think might happen here. So here we are, summer of '08, living life, blind to what is about to come. And as you can see, what comes is not good. Not good at all. People say, oh, this just happened because of COVID, yada, yada, yada. You know, for lack of a better term, COVID was a red herring. Does it hold importance to the support prices achieved and things of that nature? Yes, of course it does. Prices, support levels always matter. But in the grand scheme of things, to say that, oh, we just had a COVID dump, another one isn't possible, that's absurd. That is absurd. So now let's look at, dollar, 20% gain. And this is, you're not getting anything done in this. You're not getting anything done in this. It's not happening. This is a buyer's time. Just gonna buy, and wait. There's a good advantage point for buyers here. So let's look at gold. So where are we at? Gold, so here we are, broken this lower cup here. So let's look at present day again, real quick. So present day, we just broke this threshold. That's why I can say, relatively where we are in this point in history in 2008. I'm strictly going off of this cup and handle formation on gold. I'm open to new ideas. This is not my thesis for my doctorate. I'm just kind of pointing some stuff out that I think is interesting. So please, no hate. It's we're all just degenerate TA analysts here. So let's just keep it light. So I'm basing where we are off this break of this lower cup. So let's go back in time. Why don't we? So here we are at the break. August of '08. Volatile, right? We got down to $743. We got up to $923. All in the span of a couple months. Like, this is 2-3 months here. And then back down again. Looking back on this, it isn't really crazy, but, if you're trading hourly, if you're trading 4 hourly on gold, and, stuff like this there are a lot of opportunities to make money in this market right here. But, unfortunately, only about 5% of people will. And that is just the math. So, let us now look at what happens after. So about 2 to 3 months of just what is going on here. And then we have this is a 20% drop from, where I think we are right here in August to right here. This is about a 20% drop with a lot of volatility in there. And we have a run up from $670 to average of $1776. So that's a lot. That's like a 150% gain there. So now let's factor Bitcoin into this. I'm going to pull a Chelsea on it. Where does Bitcoin fit into all of this? So Bitcoin, I think, will follow gold. Hopefully. And that is my analysis. Thanks for watching.